Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. My name's Aaron Edwards with Santos Springs. It's August 26, 2025. Harvest isn't too far away. Hopefully, there's not a lot of rain forecasted for this week, but hopefully we'll get some showers next week. That should kind of seal the deal, I'm guessing, on a lot of crops across the Corn Belt. Let me know what it looks like in your neck of the woods. Seems like it's a little dry. May continue a little dry this week, but hopefully get a drink next week. A big question on my mind is kind of where is the support in these markets? We got a little rally out of soybeans. So we're going to go over the analysis, but first let's start with the recommendations. Always want a bias towards that call to action. And here we go. Let me check the box there. No action recommended. And I'm going to keep the same in parentheses there, unless you are behind on soybean sales. So we recommended fairly aggressive soybean sales that last few days of June, and we came up close to those price levels last week. So if you made on new crop beans, if you made more sales last week, or if you made enough in June, that's fine. If you still need to play catch up, basically last week the market was heading up. It looks like this week's the market's heading down. So making sales last week but dragging your feet was the right thing. If we're heading down, I'd kind of go the other way. That sooner is better on the soybean market. So if you have to play catch up on soybean sales, you think you're going to have a few more bushels, you didn't really sell enough, then I would get that work done. Other than that, no action recommended. And now let's jump into the analysis part. The first thing that I wanted to go over is actually the US dollar, because let me grab a marker here. I think we'll do this one in red if that shows up well. Okay, there we go. Pull that to the bottom. So this is the dollar index, and actually I'm going to put that to the top. Dollar index. And if we just look at it, at the beginning of the year, we were at about 110 on that. No, that might be we were shy of 110, but let's just put it over there. We'll say it was at 109. We got up to 110 a couple of times. And then the low came in here at about 97, just shy of 97. We got a key reversal last week. Key reversal, it's when in the same trading session, if you think of a candle,
You go above it, you go below it, and you close below. So you take out the previous day's highs, you take out the previous day's lows, and you close down. So if you have an upward trading market and you have a key reversal, you go down. If you have a downward trading market, key reversal, you close up. All right. So we had a key reversal there. The question is, how weak can the dollar get? But if there is a silver lining to the weak dollar, it's that it does make our exports, corn, soybeans, whatever we export, more competitive on the global market. The reason that I wanted to point it out is whether the dollar keeps losing value or just stays kind of down here where it is. As we come into harvest, a weaker dollar very likely will translate to strong demand. So it would not surprise me with the bad prices that we have if basis continues to soften, which seasonally it would. So if basis gets worse or, just switches from old crop to new crop, which in many regions, maybe that doesn't mean it gets worse because it's already at new crop, but weak basis at harvest combined with a weak dollar, combined with weak board of trade prices, it would not surprise me for us to get friendly export numbers around, over the next few weeks as we come into harvest or even after harvest. So the dollar is one thing that I'm watching because I think we might get surprisingly friendly export numbers. And that's one thing to consider. The second image, kind of just before we jump into the actual corn and soybean analysis, we always want that market portfolio where we're working together on the exact values that make a difference for your operation so that you're selling, the right amounts. And then based on that, we look at seasonals, position the funds, technicals, and that gives us our call to action, which in this week is no action recommended. But that's how we know what to do on top of that pyramid, is because we've built out, a plan and a strategy tailored to your operation. And we look at kind of the usual suspects in that green area of how the market works, and then we can take action with more confidence. Not a crystal ball, not perfection, but more confidence. So we'll start with the corn market, and I'll start. Let me do the funds, and then we'll jump into some of the chart stuff. Okay, so grabbing a marker, let's do green here. The good news, if you think of the spec funds, we're kind of those real big oversold positions we had last year. We've almost got them bumped off the chart, so to speak. And even corn is still oversold. But really since the 1st of July, we've gradually seen, for the most part, this corn position dwindling, the oversold position. They're stepping back from it. So it's not exactly bullish, but it is less bearish. Corn is still, speculators are still oversold on it. So it's still artificially low, bad news, but they haven't continued to sell more. They're not pressuring it down more, which is kind of the big question is, where is support in this market? And if the big speculative funds are saying, man, I tried to push corn down, I tried to, really keep it pressured, but it's just not working, maybe I should step back from that. And for the last almost 10 weeks or 8 weeks, that's basically what they've been doing. I just can't make corn go down. So the question is, where is the support in the corn market? We've actually gotten a little bit, hate to call it a rally, but it's turned the corner a little bit. Where is support? That's the big question that is on my mind, both for the corn and the soybean market. So as we look at the corn market, let's look just to this is December corn, and switch that to black. The maximum oversold position was like right around in here. So corn still fell a good chunk after their maximum oversold position. That's why it's not exactly a perfect correlation. They've been oversold for a long time. And then we're just kind of barely back up to that position where they were already super oversold. The question of where the support is, and the flip side of that is where is resistance. We still have this gap on the chart. That probably gets filled at some point in time. But is support the previous lows? Oh, that got a little crooked. Is support the previous lows? Is support this blue 20-day moving average, which would kind of come up, right? And how much of a rally can we get shorter term? That, in my mind, is the really big support. And the flip side of that is there a buy on corn? Should I be buying harvest lows? Maybe this price level right here, maybe these lows, which were 390 something, maybe that's going to be the harvest low. Maybe we're going to say, man, should have bought corn under $4 and never went back under $4 on the December corn. Maybe that is the harvest low. If this is a typical year, I mean, if you say, Aaron, you got to tell me what's going to happen, your life depends on it. I think that this gap, at least shorter term, is going to be somewhat of a resistance level, and I'm not even sure we get there. My thought is we very likely are going to trade back down to the 20-day moving average, which will come up. If that holds, that's pretty friendly. That's pretty good news. But I would not be at all surprised if over the course of the next, say, month or several weeks, we don't come right back down here and test this previous low somewhere in the mid 390s. That wouldn't surprise me at all. That would be basically a double bottom. And if that happens, then, and so markets traded up, they come down, they really can't get corn under that 390. That's where I think speculators might actually say, hey, this whole being sold party, that wasn't very much fun. We couldn't get it under 390. Let's not do that. And then they flip their positions. They go to at least neutral or bought, which would add buying pressure. And we could very likely get I'm not going to say a harvest rally, but we could get corn turning a corner and maybe even rallying in harvest through harvest. I think that the market's going to need to give farmers something in the next few months so that corn trades hands. Now, that's not necessarily a great price, but what would be very normal trade, in my opinion, would be that we would go back down and we'd test the previous obvious August lows. Maybe we take them out and everybody's saying, the sky is falling, we're going to $3. Or maybe we don't quite take them out, but I think we very likely go test those levels. I think it's very likely that we rally up, go test those lows, and then say, oh, the harvest low was August, we couldn't take it out. Or, hey, the harvest low is whatever, September, maybe October, we took it out, or really, how low can this go? And then we turn a corner and we get however much of a rally that we need in order to get farmers to start moving that corn. I don't expect a real big rally, but we have to give farmers something that they can sell into, and I think that's coming maybe September, more likely October, something that farmers can say, yeah, you can have some corn. All right, shifting gears to soybeans. Let me grab a marker here. And we'll go with blue. Okay, so we've talked about this back and forth, right? We've drawn this negative 50,000 contracts to positive 50,000 contracts. We've talked about how that didn't make that straight. We've talked about how that didn't make that. It's giving me grief. Let's try this. No, it's not going to work with me. Okay. The big picture is the soybean, the speculators have been increasingly neutral, from this high down to this low, but then they just keep bringing it in at smaller intervals. And finally, last week, speculators are basically as close to neutral as you could be on the soybean market. That's just about as close to zero as you can get. We've had a couple other times that are similar. But speculators, they don't know if they want to be long or short soybeans, which brings us to the chart. And the kind of the question of this week's video is, where is support in this market? We still have blue. And here's, I'll draw the optimistic view of where support is, and then we could talk about the pessimistic view in a little bit, right? These blue lines, this would be the optimistic view, and if that happens, soybeans would trade down here to some level of support at the 20-day or 200-day, depending on which comes first, and then they would turn a corner, and we would get a rally, and we'd finally take out those highs that we had in January and in June. The highs from, let me move this out of the way. These highs in January and in June, we'd finally take those out. We'd finally have something exciting in the soybean market. That would be the good news. So the good news, what should we put on our wish list for harvest? I would say, putting on the wish list for harvest, that we would at least stay above the 200-day moving average, and hopefully stay above the 20-day moving average, so that eventually, markets might fall a little bit, but then they'll turn a corner, and then we can finally get something out of soybeans that's friendly. That's what I would say is kind of on the wish list. That would, if that happens, it would make these sales that so far have been spot on. And I know it's impossible to sell the peaks, basically, or it's very unlikely, but right around this price level, Board of Trade, we've had quite a few shots at that. So those maybe even be a little bit more conservative, but right around in there. Right, there we go. It would make those sales say, oh man, I coulda, shoulda, woulda, maybe I oversold, all that. That would be, I would say, the most optimistic scenario. And if that happens, when we have overrun bushels that we're selling at good prices at harvest, great. If there's extra bushels at harvest that we just dump because it's the highest price, that's great, right? We have high prices at harvest, that's good news. What's another scenario for this market? And I'm going to draw it with the blue lines first, but then we'll draw in the red lines. And that's the 20-day and the 200-day do something like that. And this market, it does not hold at the 20-day, at the 200-day. It does not hold at the 20-day. And it goes and tests these lows. That would be, we're back down to $10 or sub $9.90 or something like that. This is November beans, and I just would like to draw, just so that we can have a little bit of an idea here. There, I made it straight. Of kind of this wedge that's developing. Let's see if we can visualize that. So I exaggerated a little bit, especially on the downside. But if you look at the speculative position, they've been, oversold, overbought. Well, oversold, never really got overbought. And then a little bit sold, a little bit bought, a little bit sold, a little bit bought. Practically neutral. It was last week. And what we're seeing is kind of this ping pong effect where markets go down, but not that far, and then, they go up, but not all the way, and then they go down, and you can see it's kind of wedging together. Typically what happens in that situation is eventually it breaks out to one side or to the next side. Will it break out to the lower side? Will we have $8 beans, $8.50, $9 beans? Is this market going to go down? What are the chances that it breaks down to the lower side? And here's a couple of things to consider just so we can kind of think play by play. Number one, I think this market's probably going to continue forming this wedge if we get a rain next week, and then we have harvest, and there will be no weather scare out of South America because it's too soon. Really, for most of September, it's too soon to get a weather scare. So we're very likely going to be in this scenario where there's a soybean crop being harvested in the US, or harvest just starting or expected to be strong in the US. And then there's record acreage expected out of South America. And there's very little reason to be excited. And I think that those are going to be the headlines. And I think they're going to pressure us down. I would love it if they stop at the 200-day moving average or the 20-day moving average. I think there's a decent shot that we go down, not necessarily to those lows of 990, but I think there's a decent shot that this market falls 30, 40, maybe even 50 cents. I think that there's a decent shot that over the next several weeks, nothing really is there to catch the market and it just falls. I wish it weren't that, but I think there's a decent shot of that. Then a lot of the attention is going to be on South America. So if there is delays to planting, if exports are extra strong at harvest, if we can get a bullish story, I think it's probably more likely that we break out of this kind of wedge to the upside than to the downside. The main reason is that farmers, they really can't make money at this price level. And that's basically true in Brazil and Paraguay in the US. They're just really low prices. And at some point in time, low prices cure low prices. I'm not going to sell. The market's going to have to offer up something that I think can attract sellers. So I think we have, it's always tough to put out a position, but I think we have some bleak weeks in front of us on the soybean market where it's at best sideways and more likely down. But I don't think it's at all beyond the realm of possibility that we have a friendly fall season, or beginning in the fall, moving into the winter, kind of that Santa Claus rally or an October rally, the post-harvest rally. I don't think it's at all impossible that we get something friendly out of the soybean market. It's kind of like it was last year that allows us to move some beans, late fall, early winter. I don't think that that's at all beyond the realm of possibility. So I guess short-term bearish, longer term, not years, but months, bearish for the next few weeks, bullish if we look a few months out. That probably summarizes my view on soybeans. So now let's go back and let's just kind of fill in the blanks, and let's summarize just in general where markets are. So the corn market, seasonally, it is neither a buy nor a sell. Soybeans, seasonally neither a buy nor a sell. Managed money is still oversold enough to justify buying corn. And in the soybean market, managed money is just about as close to neutral as possible. Both corn and soybeans are in uptrends this week. That's good news. When it comes to basis, basis levels are below historic averages for this week. Typically, we would see worse basis at harvest at harvest. So unfortunately, basis levels will likely continue to weaken. The corn and soybean markets have shown some strength. However, it is unlikely, in my opinion, that this rally continues short term. Sideways trade would be positive. In bearish trade, is more likely, in my opinion. Wish I had better news, wish could be more optimistic, but we're coming into harvest. It's typical that we get harvest lows. This too shall pass. Prices tends to recover. I think we'll have opportunities. Hopefully, support is better than what I expected. Hopefully, there's solid support at the 200-day moving average for beans, at the 20-day moving average for corn. The worst is behind us, and we can go ahead and just get friendly prices. That's we can always be hopeful, right? Hope you have a great rest of your week. Hope your crops are looking good. I hope you get good rains that you need and you can get in the field and have everything ready for harvest in a few short weeks. I know it probably feels like it's a ways off, but from where I sit on markets, September is kind of you start seeing some pictures of combines every now and then. You kind of can get in the mood. So we're not too far away. We've still got some time, but we're not too far away. Have a great rest of your week.